What's going on, guys? So if you're waking up, staring at your charts, feeling a little lost about where the market's going to go, where the market's headed, this video should hopefully be a game changer for you. So today I'm just going to break down simple step-by-step process to find your daily bias. The key to really knowing whether it's going to be a bullish, bearish, or balanced market, which basically means to stay out, right? So if you stick around, because hopefully at the end of this video, you have a clear roadmap to making confident, not random trade decisions every single day, right? Also, if you are liking these trading tips, liking my live trading videos or anything I provide on this channel, please subscribe, please. It costs you nothing, right? So it will help me out a lot because it makes me happy. Pretty much is what it is, right? So the first thing, man, is what really is a daily bias, right? What does it mean? And it's kind of your educated guess about the market's direction for the day. So whether that's bullish, up, bearish, down, or balanced, neutral, consolidating, right? And without it, you're literally just guessing. And unfortunately, if you're guessing, right, improvising, it's a recipe for a lot of losses. And kind of this method I use helps you analyze the previous session, news, and volume to predict what might come next and kind of align your bias with your trade so your win rate is even higher. So whether you trade Forex, futures, options, crypto, whatever the fuck you're trading, bunny rabbits, it works. All markets move the same. This will work for every single market. And the secret really is understanding the previous session's price action, previous session volumes, and any kind of big news that might be being released or any kind of big moves that might have already happened. So let's go ahead and break this down, guys, step by fucking step, right? So let me move this bitch over here. Good enough. You can see my full, beautiful presence. But first thing to be said is the market will literally only move in three ways, guys. And it's fucking easy to really tell which ways these are. We either will have a balanced range where the market's chopping with equal highs and equal lows, like right here, right? We'll have a bearish market where we see the market making new lower lows and lower highs, or have a bullish market where the market's making new higher highs and new higher lows. Those are the only three directions the market will trade, and it won't trade in any other direction, right? We'll kind of have manipulation, fake outs in certain directions. But what we see happen every fucking time, right, is after we make a big move up or down, we'll have a balanced range. The market will then repick a direction. By that, what I mean is, right? So let's say we are straight up just pumping, right? Pump, 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 pump. We get a balanced range, we pump. We get a balanced range, we drop. We get a balanced range, we pump. We get a balanced range, we drop. You can kind of see me going on over and over again. We will drop, balance, up, balance, whatever it is, whatever the direction is, it'll always kind of be a balanced range most of the time in between. And that's something that's very, very important to kind of note down is the balanced range. The consolidation is super important to tell your overall bias. So the first thing you really want to do is I like to go in the 4-hour time frame, right? Zoom out significantly and find my longer term bias, meaning what is the longer term time frame doing? What are the highs looking at? What are the lows looking like? So I'll go in the 4-hour and I can obviously see we're in a very, very clear bullish market, right? Let me get rid of my zones here. Get rid of my zone. So we're in a very, very obvious bullish market where the market on the longer time frame is making higher highs, making higher lows. That's my first thing. Market is bullish, right? Now I'll look at the 30-minute time frame and see what the shorter time frame trend is. So the higher time frame, obviously super fucking bullish. What is a shorter time frame saying? Same thing, super fucking bullish. So my bias is already leaning towards the upside. It does not mean that the daily bias is going to be to the upside, because for the market to continue to go up, we must seek liquidity first. What goes up must come down first, and that's kind of how it will play into the day. So at least we know the overall direction of the market is to the upside. Now, how do we use this to help us identify what the current day's bias might actually be? So remember what I told you about how the market likes to move, right? So let's just take a look at the previous day, for example. We were pumping, consolidated, right? Pumping, consolidated, right? Right here, we snag liquidity, which we usually do a lot after consolidation, right? We snag liquidity, right? You can kind of tell by these wicks before continuing to move up. Happens all the fucking time. Then right here, same thing. We pumped up, had a little bit of consolidation, had a major liquidity grab, right? The bigger the liquidity grab, the bigger the move up will be. And then the market shot up right away, consolidated, shot up, consolidated, shot down, right? Grab, sorry about my ugly ass drawing, grab more liquidity, and it could be preparing for a massive move up, right? Just keep that in mind while I break everything down here. So with that being said, Now that we know the market has to grab liquidity before making a move up, now we know the market will be balanced before switching directions, it will help us out throughout the day. Something to keep in mind first, is there any major news? Any major news dropping, right? So, for instance, today I told everybody not to trade because it's going to be a balanced shitty price action day. Why do I know that, right? Let's look at the calendar here. Today, no news Monday, number one. Number two is we gapped up on Sunday. Number three is we have JOLTS tomorrow. We have Powell speaking tomorrow, and we have non-farm payroll later on this week, which is a shorter week. So usually when the market is waiting on big news, big economic data, big speakers, it will chop around. The big guys are waiting for that shit to drop, then they'll take action, which is why you'll see dead volume, which is why you see shitty price action. So if the day is opening up and I see the London session is dead, and I know there's big news coming, the PA is going to be dead. The market's going to be in a balanced, shitty range. So automatically that will negate everything. They're like, I'm not going to trade today. Market's going to be pretty shitty. Market's going to be pretty balanced, and I'm not going to have any good entries. Shit PA, everybody's waiting for tomorrow for big data, for news. So I'll play with the smart money and I'll wait for them. I'm not taking a chance trading a shitty market when I know there's a very good chance it's going to be balanced and shitty PA. So what I'll do is I'll just wait. That's the number one thing you cannot have, look on your side. Second thing is you can analyze volume, right? Again, we'll get into how the step-by-step process, but the second thing is you want to analyze volume. So we can get volume back on here. All I mean is what is happening in the consolidation of volume. So usually when you see a continuation, if you want to see continuation, the consolidation before will have increased volume. So if you see consolidation with dead volume, kind of like what we have right here, what we have right here, right? The market will likely reverse versus to continue. So that's something else you can use for your bias. But let me walk you through my step-by-step plan. So we're looking at the pre-market session. So let's just go back until this day, or let's go back when we took our first trade right here. So on this Monday right here, this is when more news was coming out, right? We had a very bearish market on the 4-hour and bearish on the 30-minute, right? We're kind of holding these higher highs, holding these lower highs, lower highs, lower lows, had a liquidity grab right here. Almost had a liquidity grab actually. So my main bias from the higher and the lower time frames were shorts, right? Now, what happened pre-market, right? We started to get bought up. Remember, for it to go down, it must go up, and same thing vice versa. So it started to go up, right? We started to see a leg down, and then off the open, this is what the market looked like. We gapped down, so again, bearish sentiment, bearish 30-minute, bearish 4-hour. Started to make a weak move up on some dead volume, retrace, grab liquidity, come back up and pump, right? Pump, 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 pump. So again, if the market is going down, what must it do first? Come back up and grab liquidity. So we had resting liquidity here at the overnight session highs we grabbed, right? We had resting liquidity right here at the previous day highs, which didn't take. But so this day, I was expecting the market to go back up, sweep above the pre-market highs for the sell-off to continue. That's kind of what happened. That's where I got my bias. My bias for the day, because of 30-minute, 4 hours bearish, I was expecting the market to grab liquidity and then continue selling off, which is kind of what happened. But again, literally right here, it should have continued to sell off. We had major news that peace was going on in Iran, and the market just pumped into all-time highs. So after this happened, our bearish sentiment shifted to bullish because of good news and because the 30-minute and 4-hour had these new higher highs that it was holding. Now, coming into a day like this, right? We have a major move the previous day. So every day where we have a big move, expect the next session to be choppy. Most of the times it will be like that. So with that being said, right? Previous day we had a major move. Pre-market was choppy, right? And then what I do pre-market, I mark out the high and low of that session and I trade the range. So if I know the session is going to be choppy because of a previous move. Plus on this day, we had Trump and Powell speaking. So I knew they were going to be waiting for them to be done before major moves happen in the market, right? So we were moved up. Now we started to chop, knowing it was going to be choppy, knowing the big move happened, knowing I'm playing a balance range. What I'm looking to do here is play longs off the bottom of the range, shorts off the top, right? That's what I'm looking to do. That will be my A+ setup. So I knew the bias was going to be choppy. How did I know? We had a big move up, right? The previous day, London session chopped, and we had major news that everybody was going to be waiting for. So I knew the session was going to be choppy. So what did I do is I played the chop. I played shorts at the top or longs at the bottom. Pretty fucking simple, right? Now, this day right here for me was an awesome PA day. Just couldn't find an entry, right? Let's talk about what we just learned. The market is now super bullish. What happens with the market, right? What happens when the market is bullish? It goes up, consolidates, seeks liquidity, and then continues to go up. Easy, right? Simple, simple shit. So what happened? Pre-market, right? Up, consolidating. Now, okay, market just consolidated. It's probably going to seek some liquidity and then head back up, right? Exactly what it did. So the market consolidated after a big move up. Wasn't significant, but it was a decent move up. Took out liquidity and then just blasted right up. To that day, I did not find an entry. I didn't have a single entry because I did not have an entry trigger and we didn't retest my level. So usually when we're playing something like this, I don't just try to guess the breakout, because if we're in a balanced range, we can just sweep liquidity and stay in the balanced range for a very long time. So the way you play this, the way you should base your bias is you mark out the top and bottom of the balanced range, you wait for a breakout and then a retest to follow the market. So this day we had a breakout but no retest, so I didn't get in, even though I knew where the market was going to go, had a pretty good read, didn't get a retest, so I didn't get in, right? Same thing happened on this day, right? What happened on this day? The market moved up, started having a balanced range. So this was actually kind of a little bit bad. It took liquidity on the upside, then took liquidity on the downside, held right here, then popped up, only to go back into a balanced range, sell off, grab more liquidity, pump back up, and now back in a balanced range. So pretty obvious. You've seen the same scenario, same setup happen every single day. So you're looking at the pre-market session and looking at news and you're looking at volume to determine what can possibly happen, right? What might happen here. So just by looking at this, we're going to wait for a breakout retest for a continuation. But because we had a pretty big move, right? And there's news coming this week, so we knew it was going to be choppy. We're looking at a balanced range play, not any direction. So fuck the direction when this shit is happening. We're looking at a balanced range play. So with that being said, let me go ahead and get rid of this. This is what I would have done today if I was going to trade. We have a balanced range formed. The lows here, lows here. I wait for a breakout, right? An aggressive breakout here. I wait for a retest for us to continue down, right? Now, you must be thinking to yourself, Elder, why is this not grabbing liquidity? Well, it 100% can be, right? Which is why we're going to be playing the range. So there's two simple setups for me today, right? That I could have taken. It was either going to be a breakout of one side, retest for a move down. It was going to be a breakout of the upside for a move up, and this would have been higher sizes of the overall trend, or longs off the bottom, shorts off the top. Those are my only plays for today. So what ended up happening here was we did get an aggressive break, and now we're retesting, but we're still chopping. So for me, on the 5 minute is when I look for the aggressive break. So I need a candle to aggressively close underneath the level. We had two candles here aggressively close. We're still retesting, holding the midline here. So if these 45s get held, I think the market will continue to sell off and probably go into this gap we have right here. That's just how I would look at it, how I would base my bias, and how I would play. Now, let's just kind of do some testing here, right? Let's just say the day goes on. The day goes on and closes like this. So let's say we stay around and chop for a while. We actually come back down here, fill the gap, come back up, chop, and now we close out right here like this. Now, this is the close of the New York session. What happens during the Asian session, right? During the overnight London session. The market starts to pump up. I actually respect this, makes a new high, grinds up, 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 up. And this is the end of the Asian session. And this is right here is when New York will start. So what will be my bias when this is happening, right? So we had consolidation, liquidity was taken out, right? We had a move up, now we're consolidated, move up, now we're consolidating. So what I would wait for us to do here is sweep liquidity, right? And then continue the move up. Pretty simple. That would be my bias for the day. Hopefully we have some demand levels that we look to play into, or supply levels I look to play into. So I only trade supply and demand. So this is how I get my bias. Then I align my interest in my supply and demand. So for this day here, I think we're going to go long. I'm looking for my demand levels. We can see liquidity into here. We could sweep liquidity into this demand level. Whatever it is, I'm looking for my demand levels to go long or supply levels to go short. So I align my bias with my key levels. That's how I make my plan every single day, right? It's very, very simple. The big thing is you have to remember that the market will only move, right, based off of three directions: up, down, sideways. And once you know that, and you combine that with reading volume, so let's say we're moving sideways with dead volume, it's probably going to reverse. Let's say we're moving sideways and the volume's picking up. It's probably going to continue in that direction it's going in. So again, it's not just guessing, right? We're not just guessing. We're taking a look at what happened in the previous session. We're taking a look at big news, big moves, right? Remember, there's big news coming, probably going to chop. If there's a huge move the previous session, it's probably going to chop, right? If the market wants to continue up, it's probably going to seek liquidity first. If it wants to continue down, it's probably going to seek liquidity first. Remember, what goes down must come back up first. So this is not meant for you to execute. It's meant for you to base your bias, right? Base your bias. So let's just kind of go ahead and replay and go to a random day here. Let's just go into, well, I don't want to actually have any entry. Let me just go to here. Okay, so we can kind of just guess what's going to happen. So the market has not opened yet. We're on the 30-minute time frame here. What is going on with the market, right? Big move up. Now we're chopping. I don't know the news here, so we're just going to ignore news and just kind of go off price action. But we have balance range low, balance range high. So what I would be expecting for us to happen here, let's say the overall sentiment of the market is just shifted to bullish, right? So we kind of want to be mostly focused on longs. And since we've been bounced for a while, maybe there's some outside news cuts I'm not aware of. We're just going to ignore that for now. But we want to wait for the market to either go long here or go short up here. We're not going to guess breakouts. If the market rejects this level, we're going long. Rejects this level, we're going short. That's the first scenario on my bias, right? I'm expecting the market, if my trend is up, to either to sweep liquidity down here, right? And then continue to go up, retest, and go up. That's my main bias, my main aim. But if there's still news dropping the next day, whatever it is, something that will happen is if we sweep liquidity here, right, align with the bias, we'll go long targeting the top of this. We're not going to, try to predict the breakout since it's rejected this level 4 times. We're going to just target the top. And then let's say we break the top, we retest. Here's another entry for longs and target the next coming support and resistance, right? Pretty fucking simple. That would be my bias for this day here. Will be okay. Play longs off the bottom, shorts off the top, or wait for an aggressive breakout of this range where we close with increased volume, retest for that direction. Wait for an aggressive close, retest for that direction, or go short off the top and long off the bottom, right? So let's just go ahead and skip throughout the day. We get a breakout here, no retest. We just get a quick breakout. Actually, we do get a retest. This candle retested right here. So we get a breakout, retest here, and we continue down, right? Pretty fucking simple. And that's kind of something I would do over and over. What was this, the weekend? Let's see. So let's continue this and go on to the next day, right? So back. And okay, so on the next day, what do we see? The market moves down and we get a balance range, right? Market moves down, we get a balance range. And the previous session, we actually had a pretty significant move down. So we can expect chop. Market is open, right? Top of the range now, bottom of the range. What am I going to be expecting? What's my bias for this? Pretend this isn't really here, right? Bias for the day will be the same thing as up here, but now since the market shifted to bearish, it would be kind of mostly going towards the bears. But we get an aggressive breakout of this, right? We look for a retest and we look for longs, right? We get an aggressive breakout down here, look for a retest, and then we go for shorts. Or if we fail to hold above this level, right here would be a short entry, and then right here would be a long entry, right? So let's go ahead and just fast forward. See, rejected the top right there, be a short entry, comes back down, rejects the bottom, goes back up to the top, rejects the top, balanced range, right? So we would be playing the range all day, right? And since we made a major move the previous day, what's most likely to happen? Chop. So the daily bias right here for you, most likely be some beautiful, beautiful chop, right? Now let's go ahead and play into this session right here. We get a continuation down. It's still going down, a move back up. So we're trending back down right here. So the market just opened, had an aggressive leg down. So we come from a balanced range, right? Aggressively break beneath that balance range. So let's pretend this isn't there. It'd be the same thing. We're getting a lot of balance ranges for the previous couple opens, right? My bias for this day would be for us to just do a short, break down the low, retest for a continuation down, right? Or so the top of the balance range up here, same thing on the other side. So we don't have any kind of trends yet. Let's just keep playing until we find a good trend. Didn't get a retest for this. The market just continues down. So this is something that, probably would not want to trade unless we get kind of an entry, break a demand for some retest for shorts, blah, blah, blah. How much longer is this going to go? Okay, here's the open. Let's get rid of all of this and keep going through some examples. So right here, okay, right here is pretty simple, right? Market's bearish. So what does that mean for us? A huge move down yesterday, the previous day. So what are we expecting? Chop. Formed, I think it was a Sunday open. Formed the top there. Formed a potential bottom right here. So if we see price reject this bottom, we're going to look for a move back up to the top of the balance range right here. Shorts, right? We're going to look for a break of the bottom of the range here, retest for shorts, right? And if by somehow we break the top of the balance range up here, we'll look for a break, retest right here for longs. Since it's only retested the floor here once, right? Something else I would look for is I want to see the market open, respect this floor, right? And if we come back down, then I'll look for an entry since we only kind of haven't really formed a floor just yet, right? We did have a previous balance range right here where we kind of swept down beneath and retested. So maybe the market is, to some people might be trending, but for me, since we saw a major move down the previous day, I'm thinking the market will stay in this range and chop all day, right? That's just what I'm thinking when I see the previous day session and the previous or the current price action. So as the market plays out, what do we get? we get an aggressive break of that level. So our second scenario, right? Or our third, whatever scenario it was. We get an aggressive break of this move right here. We get a retest, and then we break out. Right? So that was a scenario that we had. And if this lines up with supply and demand levels, we're golden. So this is how I draw my daily bias. This is how I make my plan every single day. My main bias, where I'll drop the most size, will align with the 4 hour and 30-minute, trend sentiment. But I'll also write down every single scenario. If we break up right here, if we respect this level here, if we reject this level here, if we break out up here, this is what I'll do. I'm writing down every single scenario because the market can do whatever it wants to do. There could be random news that drops at any single time frame. It could do whatever it wants to do. So very important to keep that in mind when you determine your daily bias is to know what the market did the previous day, what the volume's doing, what the current or last session did. Do we have any major news coming out that we should kind of wait for? And if so, write down every single scenario and then wait for it to happen. Then you react. We do not predict. Hopefully this helped you guys out a little bit, right? To kind of help you kind of keep that daily bias, or just tell you all what days you should and shouldn't trade, right? So before we wrap up, a couple more tips to nail it down. So trade at the market open. That's when volume is high. That's when you see volatility spikes. That's when you get the best moves, which is I trade the market open. Watch the lower time frames for continuation. So even if we were like trending, right, expect little manipulations, little liquidity sweeps on the smaller time frame, like 5-15 minute before the big move. Avoid news days, avoid trading right before news days when when everybody is waiting, so it'll be balanced shitty PA. But that's it, man. Now hopefully how to find your daily bias, how to make your scenarios on a daily basis. So using these three kind of trending market levels: the balance range, bearish, bullish. Pretty simple, right? So if you found this helpful, just make sure you like this video and then maybe share it with somebody that can help them out as well. And again, please subscribe if you want to see more shit like this, or you want to dive deeper, whatever it is. I'll have a free course link down below in the description. Also below, I'll link a call. You can have a one-on-one strategy call with me, completely free, to see if something I can help you with. If not, don't want to help you. If I can, I'll love to help you. Also link down my favorite prop firm down below with a little discount code for you guys. But without further ado, see you on the next video, guys. Take care.